Over the past 48 hours, we got two sets of pretty horrible inflation data. The most recent data point that we received was the United States producer prices. The producer prices look at the overall costs that are either going up or going down, so either inflation, disinflation, and rarely deflation, that producers face when manufacturing a good. Let's say Apple is trying to make the AirPods, okay? And the plastic that they're shipping from China is up 30% 1 month. That's going to result in the producer prices to shift up. But not only is it going to cause that, that increase in the cost of production gets transferred to the CPI data, which reflects partially what consumers pay for things, but that data particularly is boxed into the PCE, which is what the Fed looks at to determine the interest rate figure. So that's the explanation in a nutshell. But when we look at the actual data releases, the producer prices today came in at 6%, guys and girls. 6%. 6%. It's a very seriously awful figure because the expectation was 4.9%. So from the expected 4.9%, you are up a whopping 1.1%. And from the previous data point, you're up a whopping 1.7%. The day before, we had the CPI, which came in at 3.8%. That was also above expectations. Okay, only by 10 basis points, but still, you're up 50 basis points from the data released before. And the fact that producer prices is going parabolic in a horrible way means that inflation will continue to rise. It's going to continue to rise. And don't take my own word for it. Take Fed Chair Powell's word for it. In his final FOMC press conference, he said that because the route for energy is still quite unstable, energy prices are elevated, and from the looks of things in the geopolitical realm, they will stay elevated. Inflation will keep pushing up. The chart you see in front of your eyes looks into the correlation between crude oil and the CPI data. The CPI is the white line. So we still have some catching up to do, and these always end up catching together and finding parity. What does higher inflation for longer mean as a result of higher crude oil prices? Well, it means that the Fed is not going to cut rates. Actually, when we go into the 2-year yield that shows the market expectation for the interest rate, we can see that today the 2-year yield has reached levels we have not seen since June, July of 2025. The 10-year yield has reached places we've also not seen since June, July of 2025. US Treasuries are officially back to what I like to call the Trump taco levels. Whenever Treasuries reach these highs, President Trump has historically, in his second term as president, released good news about either tariffs or geopolitical conflicts. He has to cool down the Treasury market. There's a premium on the Treasuries due to the massive amounts of uncertainty. From things like, we can go through some examples, okay? So some examples include this hantavirus. Some examples include President Trump saying we don't have to rush anything with Iran, comparing the time frames with Iran with things like the Vietnam War, with other ventures that America took into the Middle East that were years long. So him saying that suggests that the blockade will continue on and that oil prices will remain higher for longer. And the trust in American treasuries then go down. So there has to be a premium. That premium is the increase in coupon that the government will need to pay for investors who jump in. If the coupon is higher, the interest is higher, America needs to pay hundreds of billions of dollars more from their pockets to fund these investors. And they're going to have to do it because they need to raise $9.5 trillion still to refinance their debt. And if they need to print more money, which is issuing more treasuries, and then issuing more money to pay off the debts, which is the interest related to the bonds themselves, then the value of the dollar drops. It's terrible, and it can potentially cause the financial system to break sooner than expected, which in the short term will cause a drop in everything, particularly the S&P 500, which I believe the pump we're seeing now is completely fake and that we're in a distribution phase. It will be bad for Bitcoin in the short term too, but eventually would propel Bitcoin to millions of dollars, in my opinion. I'm going to share my thoughts on Bitcoin in a second because there is some important analysis to share from there. So, hantavirus, the war, Iran sending Pakistani mediators a response to the proposed US deal, but President Trump saying he doesn't like it and that it's totally unacceptable, and the Pentagon considering renaming the Iran operation to Operation Heavy Hammer if truce breaks down, the US House of Representatives expecting to discuss the executive branch of government's power in going to war with a foreign nation without their approval. That being discussed today, the president claiming to make Venezuela the 51st state of America. These are all massive uncertainties where nobody has any idea what it's going to end up leading into. So you have high inflation, you have interest rates now being expected to not only be cut by December of 2027, but potentially experience a hike. Why should markets go up? Somebody please explain this to me. You have mortgage rates. We can even take a look at mortgage rates. They're at 7%. There are 630,000 more sellers than buyers in the American stock market. Highest ever, even higher than the 2008 financial crisis. For prices to go down, you don't need just sellers. If people don't buy, prices go down. So when the entire environment is looking like this, how can people expect Bitcoin to blast off and reach all-time highs and do something different? It's completely nonsensical to me. 2 videos ago, we did a deep dive analysis. I want to add just a few pointers to that. You guys know the 200-day moving average. You guys know what happened in 2022 March. You guys know what happened in 2018 bear market, where you created that higher low, retested, and then broke further to the downside, and then lows were established in both cycles in Q4 of the midterm year. No need to recap that and conduct the analysis from scratch. I just want to highlight that we're right now getting that rejection, exactly the 200-day moving average. On the 4-hourly time frame, Bitcoin created that double top like we expected it to do so. In my opinion, if 2 4-hourly candle confirmations are situated below the neckline at $79,200, Bitcoin would fall to the support of the bear flag, which is placed at 71.5. And as we're there, I think it will be enough to take us to the lows and sweep the lows from February at 60K towards June. That is my personal expectation. Could I be wrong? It's possible that I'm wrong, okay? It's always possible. You know, there's nothing saying that I know everything and that everything I say is going to be right. No, it's not the truth. It's simply not the truth, and anybody claims that they know it 100% guaranteed, they're liars. I'm just telling you that there's so much resistance piled up at 82.5. Additionally, from the volume-based resistance, if you put on the VRVP to this chart, which I'm probably going to struggle to find like I always do, there it is. Everything compiles at 82.5. If that is broken to the upside, Bitcoin subsequently creates a higher high on the weekly time frame, reversing the trend for good, then perfect. You know, we can expect new all-time highs. But for now, as a levered trader, I'm cautious, but as an investor, I'm buying at 79,000. I hope that is clear. So in this video so far, what have we covered? We covered inflation. The administration has stated that their policies on inflation are working. Ridiculous that they have said that. E.J. Antoni, the person that the president himself appointed to head the BLS, which is the institution that collects and publishes the labor data and inflation data. So the person that President Trump nominated himself to head the BLS, just so you don't think what I'm saying is subjective, he even said that we're in trouble because the producer prices had the highest increase month on month since March of 2022, and the worst, the highest as well since December 2022, year on year. So we're seeing some of the worst inflation ever. In the past 5 years, new cars are up 20%, groceries are up 26%, health insurance is up 27%, etc., etc. And all of this inflation is taking place when our wages are not going up at the same level. So what happens if inflation is outperforming? And by the way, real inflation is way more than what the government is announcing. Keep that in the back of your mind. So if our wages are not following the inflationary trend, the government issued inflation number, then our purchasing power reduces. The rich get richer because you see asset price inflation as equities falsely go to the upside. But the unwealthy do not invest. They traditionally are not known to invest. So what ends up happening is the poor get poorer and the richer get richer. The ultra wealthy get ultra wealthier. The gap opens up. The gap between the highest paid and the lowest paid, it increases, and it leads to big depressions, and that's what I'm concerned about. In the immediate short term, though, President Trump will want to do something to bring down the Treasury yield, so I'm expecting some bullish news to come from this China trip. Perhaps some Chinese companies or the government themselves could do some work with Elon Musk, Tim Cook, Larry Fink, Jensen Huang. Let's see, but they need to announce something bullish, either with regards to the conflict or with China, to bring down treasuries, because if treasuries go up, America's dollar figure of how much they need to pay goes up, and that's completely contradictory to the whole campaigning and the mandate of President Trump himself. I believe we have covered everything that I wanted to go through. We've covered oil, we covered the Bitcoin price analysis. Just to be clear, tomorrow is going to be the Clarity Act markup. Tomorrow is not the day where the Clarity Act goes through. The markup is a good step in getting it through, but it doesn't mean it's going to get through. I think the probabilities of it happening have increased because even Chuck Schumer, the Senate minority leader of the Democrats, said, quote unquote, the Democrats will like to see a good crypto bill pass. Super important to get rid of grifting and establish this space as something serious. So I'm hoping the best clauses, the best overall interest for our industry and for the people are passed in this bill, and we can thrive as an industry altogether. To close off, Kevin Warsh has officially been confirmed to be the next Fed chair. Powell's final day is tomorrow, which is Friday, and Kevin Warsh will be starting afterwards. End of an era. Guys, thank you so much for watching. I hope you enjoyed this content. If you're looking for a place to be trading Bitcoin and cryptocurrencies, do make sure to head to the description of today's video to check out the bonuses we have available with our beautiful partners. And if you're looking for a video to watch after this, I would definitely recommend watching the CZ interview I had the pleasure of hosting. If you've already watched that, then check out my interview with Crypto Man Ran, which is Crypto Banter. Guys, thank you once more. Good night, and I'll see you on the next video soon. Take care, and as always, bye.